And we're back with our Media Roundtable. Porter Bibb, the managing partner of Mediatech Capital Partners, which advises and invests in media and tech companies. Benjamin Stretch, media analyst at Macquarie Capital USA. And Tuna, Amobi, media equity analyst at Standard & Poor's. Gentlemen, thanks for sticking with us through this half hour. And Benjamin, you wanted to comment on something that Tuna was talking about before the break, about the internet and about acquisitions.
Yeah, I just wanted to touch on the CNET point one more time and just make this caveat, and that is investing in the internet is really tough. And so I don't want to beat up too much on CBS, the board and management, for that acquisition, because you know what? There are lots of options out there, and it's a really difficult space to invest in and to know how this is unfolding.
But Mr. Moves says you have to make that type of investment and be proactive to be a major player. You can't be on the sidelines in this day and age.
Absolutely. For me, it's all about optionality. It's all about the objective, I think, that these media content companies need to get to is they need to aggregate the experience online to look something much more like the experience that we get through cable, the cable electronic program guide that we have now. So it's all about bringing the audience together, aggregating eyeballs, the biggest audience you can amass.
Who's doing that the best right now?
Well, actually online right now, probably the best example of that is Hulu. Hulu has online advertising. There's no subscription service yet, but I think that will come in time.
It will definitely come.
It will come in time.
Of the major media companies,
That's
Porter,
right.
who's doing it right?
I like what Disney is doing. I think Disney with ESPN and with all of their other digital initiatives is way ahead of the whole lot.
Yeah, and let me add one more thing on that too. I think a company like Disney with ESPN have an enormous opportunity in terms of taking that video content out of the living room and allowing you to access it away from your sofa, away from your living room.
Absolutely, and the big initiative that they announced a couple of weeks ago, taking ESPN local and going into the local individual markets around the country is going to be gigantic.
Tuna, do you want to comment?
Sure. Well, one of the things that struck me about what Les Moonves said was, or keeps saying, was that for CBS, it's all about content. It's a content company. Well, sure, that's true, but I don't want to convey the impression that a CBS investor is really investing in a content company in the mode of maybe Viacom or Disney or Discovery Networks, etc. So I think you have to keep that in mind. Sure, they have some really good content, but I think at the core of the company is really the ability to distribute and to monetize that content through various channels. And syndication, as you know, is huge.
Yeah.
And the other point I want to make real quick was that CBS really, in our view, has really never been at a more vulnerable financial profile right now. Just slightly more than $300 million in cash, $7 billion of debt. With the financial profile looking so shaky, you have to wonder whether the dividend cut that they had really has helped to boost their profile.
And Tuna, let me let Porter Bibb and Benjamin Stretch get in here. Porter?
Yeah, I think Tuna raises the right questions, because one big question mark hanging in front of CBS and its shareholders is what happened when they divided Viacom and CBS into two companies. Mr. Redstone, Sumner Redstone, the major shareholder of both companies, he was expecting 1 and 1 to equal 3 or 4, maybe even 5, and he got 1 and 1 equals 1.5. And I think one of the big issues that Mr. Redstone and investors have to look at is, shouldn't these two companies be put back together?
Yeah, and just to really follow on from that, what we've seen over the last few years is a fundamental disaggregation of content ownership and distribution. Look at the cable companies themselves, Comcast, Time Warner Cable. They own much less of their programming than they used to 10, 15 years ago. So the vertical integration of the content and distribution business has completely collapsed. The question now is, does what's happened and the experience that the content guys have had in the downturn force content and distribution back together?
What does the future hold, say, for NBC Universal?
Well, I think that's a very, very interesting question. And I think that the timing here is critical. So every year, Vivendi have the option to sell their 20% stake in NBC Universal, and that window opens again very shortly.
Yeah.
And actually, you know what? This year, I think there's a very strong probability we see it change hands.
And Benjamin, we're going to hold it right there because we're going to get back to this. Benjamin Stretch, Porter Bibb, Tuna Amobi joining us. We are talking media, and we're talking about lots of things, not the least of which the competition between media and the internet, and also we're going to get a little bit into M&A when we come back as well.
More M&A, and I want to hear what you guys think about the fall season coming up.
Very much so.
What shows are worth watching? All right, more Bloomberg News after a short one. And we are back with our Media Roundtable. We're talking all things TV, multimedia. And if you were watching the Emmys last night, gentlemen, one of the actresses, one of the comedians, I can't recall exactly who it was, but she was so funny. She said, "Welcome to the final year of broadcast television." There's a little truth to that, right? Considering the huge inflow of cable programming and reality TV, Porter.
The major networks are enjoying the way the movie business is a big boost in attendance and eyeballs right now, but it's not going to last. It's the economy. Everybody is keeping his hand on his wallet, and television's free. But we're in the sea change moment of seeing the end of broadcast television.
Yeah, broadcast. The point with broadcast television, it's really important not to forget this, is broadcast television is going to be there this cycle. So structurally, I absolutely agree. Broadcast TV has real problems, and they really need to be thinking about migrate.
No kind of content that can bail it out?
Well, it's not actually. It's about how you get people to pay for the content too.
That's
and
right.
so you really need to try and migrate broadcast to a more of a cable model.
And well, Tuna, you wanted to jump in here as well?
Sure. Les Moonves likes to say that broadcast TV is still the best game in town, and it's hard to argue with that. But I have to highlight that the trends have not been, encouraging over the last few years. There's a significant audience erosion, not just to the cable networks, but also to the internet. The whole model is being challenged by the continued proliferation of DVRs. How do you measure all the eyeballs that are gravitating to the online platforms, et cetera, mobile platforms? That's still the core challenge. And then you have the ratings currency issue, which is still, in my opinion, one of the major, challenges that's facing the industry right now. And CBS obviously clearly has its own work cut out for it.
And Tuna, let me jump in for a second. As we head towards the close, Lori had pointed out something during the break, and I think it's worth mentioning. Yes, you did. What about the fall season? What's that going to portend?
Yes.
Well, the fall season offers some interesting innovations, but what you're really seeing is the trend away from reality television, which I believe has killed the networks, and toward back to because there's no repeat value. You can't syndicate and have secondary and tertiary revenue streams, which were really supporting the networks over the last several decades.
I think Porter is absolutely right. I think that the model is not what it used to be, and this fall season you're seeing comeback of sorts for networks that experienced a major disruption last year from the writer's strike. So the theme that we're hearing is really cost cutting across the board, and then you see the Jay Leno experiment, which we view as the major swing factor. If that experiment succeeds, then you're going to see more networks gravitate to, even more lower cost programming. And then you have CW, for example, removing their Sunday night schedule. That's another experiment which we believe could set the tone of what the other networks are likely to do. And
Tuna, I'm sorry, let me get Benjamin in here real quick before the close. Is it a sea change, the Leno experiment?
Oh, absolutely. I mean, the CBS model this year actually is not that dissimilar from last year. CBS is probably doing the least experimentation of all the networks. NBC's really going out there. I expect ABC will too. And CBS is sticking with Survivor, NCIS, 2.5 Men. There's a lot of proven programming in there, and it's good programming and it's rated well. So I don't think the risk around this season for CBS is actually that significant.
The risk is with NBC, and as Tuna said, the jury's out on whether Leno is a bubble or a sustaining new model for network television.
Gentlemen, thank you so much. This has been a very revealing half an hour. Thank you so much, Porter Bibb, Benjamin Stretch, and joining us from here in New York, Tuna Amobi, media equity analyst at Standard & Poor's. Thank you all so much.